Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio right here in Mumbai. Thanks for staying with us on the channel. The pre-opening rates indicate that the market will open in the green this morning. The SGX Nifty suggesting that. Of course, we'll keep our eye out on several stocks. On the upside, HDFC Bank for its numbers. On the downside, Avenue Supermarts and Wipro post the disappointment. Manoj Muralidharan, the Vice President Derivatives at Relicare Broking, joins us now to give us some trends for the day and the week. Manoj, what are you looking at? Do you think the market could trend higher given the cues that we have? And what are the stocks that you're watching today?
Good morning, Sonia. Sonia, if you see the general pattern in which the market behaves is the last week of the monthly expiry is when we see a trending market coming in, and generally the weeks in between as a range bound session. But then of lately, the last 2 days, specifically Thursday and Friday, what we have seen is not only the FIs have covered some of the short positions, but then the IVs of both Nifty and Bank Nifty has dipped. And the best part is whenever the Bank Nifty aligns the Nifty, the trend has got strength. So we are believing that this upside can go all the way to 18,150 to 18,200. 17,950, 950 becomes the support for the day. That's the level where we can buy that. Same goes for the Bank Nifty. The levels will be 42,800 to 43,000. Now, the important thing is we believe that once we cross above 18,200, which might be a case because of the long position that we are seeing in the index, and obviously, we all know that there is a huge event line next week. There is a possibility that the Nifty might again stage a new rally all the way towards a new high. So as of now, the short-term target with 18,250 and a support of 17,950 becomes a buy for the Nifty, and 43,000 for the Bank Nifty becomes a buy with the support close to 42,300.
Manoj, what about your trading ideas, stocks?
Prashant, Kotak Bank, I guess it's been more than 7 to 8 hour trading session. We are seeing some delivery-based action, and we are also seeing into the ratio analysis that goes on in the weightage it has on the Bank Nifty. So there is a fair possibility that we expect the stock might rally to 1830, 1830 as a target. The support for the stock is somewhere close to 1760. So with yesterday's closing, I guess 1778 to 1780, it becomes a buy with a stop loss of 1760, and we're expecting close to 1830 as a target. From the FMCG basket, I guess Britannia is one stock we have been seeing good buying, and we expect that there might be following buying, and the stock can rally all the way to almost 4,400. 4340 becomes a good level to go long. The stop loss should be around 4,300 in the stock as well.
Okay, all right. Thanks a lot, Manoj, for joining and giving us that view on the index as well as a couple of trading strategies. Well, let's move on then. Let's focus on the IT space. Ravi Menon, IT and technology analyst at Macquarie Group, joins in to run us through his big call on the IT space. Hi, Ravi. Good morning. One school of thought is we have been comparing current valuations with pre-COVID levels. But post-COVID, things have changed. So maybe some of these IT stocks deserve a better multiple. Now, time will tell on that front. But from your standpoint, well, your report suggests that you're quite positive on mid-cap IT, particularly Persistent Systems and LTI Mindtree. Run us through the rationale for both those two.
Thanks. So we are positive on the sector overall, right? Because we think that this recession is very different from the GFC. We don't expect spending cuts to happen. We think it will be very minor. And the Indian vendors, for the first time, I think they are positioned as strategic vendors who will benefit from vendor consolidation. I think that's the first two when we are entering a US recession. So I think if you have a sense of history, this is a little bit different compared to the previous. And that's what we've been saying and why we are positive the sector overall. Even the smaller firms, I think, are more strategic vendors compared to before.
All right, got that. So that is the premise on which... Sure. The premise is that you're positive on the sector. But just coming to Wipro particularly, any thoughts? Because, it's underperformed for a while. Even this time, it's the lowest amongst peers in terms of a constant currency revenue growth. Would that be on the back burner compared to the other stocks?
So our pecking order, the large caps is HCL Tech first, followed by TCS, then Infosys, and then Wipro, and last Tech Mind there.
Okay.
All right. Ravi, I wanted to ask you about this LTI Mindtree. That you're positive on that one. What about LTTS? They've gone ahead and done their acquisition on Friday, and the street didn't react to that very positively. Do you have a view out there? Because it's a group transaction, takes away a lot of their cash, and as the stock was trading at premium multiples. Your take?
So the transaction specifically, we cannot talk about that because I haven't published a note on it yet. But overall, LTTS, we like it among engineering services peers because we think that it's a lot more broad-based compared to the engineering services peers. Valuation does limit upside because if you do not look at engineering services as a narrow sector and compare that more broadly with IT services, which also has the same kind of India outsourcing value proposition, then peer group firm LTI Mindtree seems to be trading at a lot more reasonable level if you're looking at it on a PEG basis. And LTI Mindtree, coming to your earlier question, why we like it so much is because we think the combined entities actually have lower business risk compared to their separate firms. And I don't think that is really reflected. I mean, the stock is not done well post the merger, while on our framework, the separate companies rate much lower than the combined firm. I think that as a merged entity, this deserves a premium multiple compared to pre-merger.
Ravi, if someone had time on their side, good morning, Prashant here, right? We're not looking for a quarter, 2 quarters. Is this the right time to start accumulating IT stocks, in your opinion? Slowly, systematically buying into the space? Yeah.
Yes, Prashant, definitely. I think so. I think that we've already started seeing upgrades on the margin front. We had been expecting that margin has a lot of upside in FY24 because the lateral wage pressure, the high attrition, all of that was an issue, especially the first quarter of this year. And we were saying that's not a structural problem, that it'll normalize over time. And we already started seeing that margins are expanding, and all companies still have a lot of headroom in utilization. And as attrition comes down further, we expect margins overall will improve in FY24 as well. So I think that revenue upgrades as well will follow, because once we have visibility in the next couple of months, I expect that we will see a lot more revenue upgrades also from consensus. We are significantly ahead of consensus.
Yeah. As the concerns abate slowly but surely, will it lift all boats broadly? I mean, so... Or you think there will be significant divergence between something does very well and something is down in the dumps? So, I mean, is it more important to have exposure to IT as a basket rather than just getting that stock absolutely exactly right? Go on.
I think, you have to really pick and choose a little bit. Okay. It won't lift all boats equally. That's why we try to look at, which are the most sustainable firms. Some firms have probably benefited because there was a supply constraint and, at that time, I think it was more secular growth across everyone. Now, I think this year, you can really separate out the growth winners.
In terms of commentary, there was still some caution, right? Whether it's HCL Tech or TCS, both stating that Europe continues to be a challenge. There's some delays in decision-making, of clients. Do you think a lot of that is in the price, or are you still cautious on that aspect?
No, I think that, barring a really deep recession in Europe, that if that is sudden, say, next winter, something like that is not yet in the price. But the US recession is definitely in, and that's something that we feel is it's not going to be as severe as anticipated. So in a way, I think the price overall is attractive at the moment. I would say that we should see, overall IT services do well as a sector.
Okay, all right.
Just one more thing. Do you think, Ravi, that ER&D as a space, I mean, we've heard it from other analysts, is more resilient as a theme? I mean, we've got about 3-4 plays here, and stocks were bid up sky high. But is that a theme which is going to be resilient and generally, I mean, faster growth over the next many years?
So I'm not sure if it will be necessarily faster growth because if you look at how we analyzed, say, LTTS, we've not really seen that post-COVID boom that we've seen in IT service spending in year-end. At least for LTTS, it's not really very visible. So we think, yes, there is a long runway of growth possible, longer than IT services, because the exposure to India outsourcing is less, so the offshoring is not as much. There is a longer growth runway, but near term, I think IT services stocks could actually outperform or outgrow the ER&D stocks.
Okay, all right. Ravi, thanks so much for joining in. Clearly positive on select stocks as well as the IT space. Let's see whether that call plays out. But appreciate you, Ravi, stopping by and giving us that view. Well, it's 9:10. We've got the pre-market, pre-open rates that are in. Let's go back to Sudarshan. Sudarshan, what's your call at 9:10?
Well, buy the Nifty with a stop under 17,850. That's the initial stop. Buy L&T. L&T is a buy with a stop under 2,100.
All right, so Darshan, the Nifty is opened up 75 points higher. You're saying still to buy it or buy it on a dip?
Well, that is for the trader to decide, but I think some parts should be bought now and some maybe at a dip.
Got it. All right, Mitesh, what about you? What's your 9-10 call?
Yeah, I'll go, since I have all long calls, I think I'll go with a buy on Indices Bank. Keep a stop at 1224, look for targets of 1280.
Okay, that's interesting. Indices Bank comes out with its numbers this Wednesday. That's on the 18th. So ahead of that, perhaps some buying action. By the way, HDFC Bank is looking good, up almost about 1%. NCL Industries had a good Q3 update, so that one as well is in the green. And Avenue Supermarts on the downside after margins hitting a 7-quarter low. But Nimesh is with us to tell us about what the standout brokerage report is of the day. Nimesh, over to you.
Hi, Sonia. So today's standouts on delivery. Macquarie has initiated coverage on the stock with an outperform rating and a target price of 440. But they believe the stock can give 100% return in the next 3 years. Now, delivery is a play on growing e-com penetration, rising discretionary spends, 3, formalization and digitalization, and 4th, improving logistics efficiency. In fact, UBS is expecting 4x growth in terms of volumes by FY30 for delivery. And delivery is a company which is sitting on a leadership position in terms of cost, positive unit economics, and they don't need any funding for the next few years, because they're sitting on a lot of cash. So on back of all this, initiating coverage with an outperform rating and a target price of 440 on delivery.
You know, one thing is for sure, if you buy delivery, you'd be buying it at all-time lows. I mean, you know, it's never traded lower and it's traded history. Thank you very much for that. That's an interesting call from Macquarie on delivery from Nimesh. Now, Avenue Supermarts, let's revisit that. There are downgrades. Mangalam, over to you.
Well, the halo around DMart is seeming to wane off after these numbers because the gross margins and EBITDA margins are at a 7-quarter low. Revenue per square feet is still below pre-COVID levels. And the company said that discretionary non-FMCG products haven't, bounced back or not done as well as they expected it to do. So as a result of which, we've seen multiple downgrades on the stock. We start with Nuvama. They've cut the target valuation to 55 times EV to EBITDA from 60 times earlier. Morgan Stanley has downgraded to equal weight. They've cut the target price from 4,600 odd to around 3,850 as well. And we've seen UBS, which was already a seller in the stock, they further cut their target price from 3,700 to 3,500. However, just keep an eye out on a couple of things. They've expanded their e-commerce operations in 4 more cities. Now it's doing about 250 crores per quarter in terms of revenue. So let's see how that pans out. And they're also in process of commencing a pharmacy shop-in-shop. So could that support and augment their revenues going forward is something we have to see. But revenue is not as much a problem as margins are. So let's see how that pans out.
All right, Mangalam, thanks very much for that. Avenue Supermarts. One more name I want to put out, and this is Market Laser. We had this extensive chat on IT services right now, and of course ER&D as well with Ravi Menon earlier. LTTS is basically the stock that is up on your screen and seen a break on Friday. Now, the reason I'm putting this up is because this one, again, like so many others that we've been highlighting, has seen the break of that rising trend line from the lows of 2020, all the way from 2020, and this is the first time it has happened, and then it assumes a little bit of significance. So basically, the low was March 23, 2020, the absolute low. You kind of draw that up, the next touch points from on the lows of July the 4th, 2022, this year. That was the first time you got a touch there, a sharp bounce higher, and then 5 days back, I mean, this trend line was broken, but after breaking this trend line, it didn't do anything. I mean, it middled around for the last 5 days. Then you had a news flow which came through Friday after market hours, and then on Friday, the stock saw about a 5.5% lower kind of cut. So, is it time? This is a chart which needs repair. It's a space which is well liked. We'll find out, but 3,800 approximately is what it needs to take out for it to come back into more buyable kind of zones. Guys.
Okay, we have about 10 seconds left for the market to open this week. Looks like it's going to be a decent opening. 18,000 is here once again on the index, and the Bank Nifty is up about 250 points. So that's the first take. On expected lines, HDFC Bank is your top mover, up almost about 1% after a good set of numbers, and that's taking the market higher, 60 points higher now on the index. The Nifty is up in the green, 0.3%. The Bank Nifty is also charging ahead, courtesy HDFC and courtesy HDFC Bank. That one is now up over 1%. But the entire HDFC group is looking good. HDFC Life is also moving up with some strength. A lot of IT stocks are moving up. Remember, the analyst just a while back was telling us that IT is looking attractive after the recent fall. Infosys, HCL Tech. Important to see how Wipro is shaping up because the numbers were disappointing. So perhaps the stock as well. Wipro should come up for you on your screen. Okay, absolutely flat with a bit of a negative bias over there. Since we're talking earnings, let's also look at Avenue Supermarts, which has been disappointing. In pre-opening, it was down about 4.5%. That's what the opening tick is indicating as well. Apart from that, you also have Just Dial. Of course, Nigel will talk about that in greater detail. But for now, the first tick on Just Dial is very good, 8% higher. Post a good set of numbers that Just Dial has delivered this time around. Couple of other heavyweights. HUL comes out with numbers this week on Thursday. Ahead of that, HUL is tad bit soft, down almost 0.4%. In fact, Britannia, Nestle are all in the red. So that's one pocket that is underperforming, the consumption piece. Even Pharma, Divis Lab is down almost about 4 odd points or so. Nothing alarming, but nevertheless, it's underperforming the market. So give and take everything, it's a strong start. Nifty holding on to 18,000, holding on to December lows, holding on to the 100-day moving average, and the the advanced decline ratio as well in favor of the advances. So good opening coming through.
Well, that's right. So just to tell our viewers that TCS is appearing like it's down 1.5%, but actually it's adjusted for its ex-dividend. So the special as well as the interim dividend, both of them have adjusted. So adjusted for that, actually, the stock is higher because both those two put it together, I think it's more than 70 rupees odd. So keep that in mind. Moving on to a couple of other names. RVNL, well, that stock is open up well in the green. It's up closer around 2% odd. In terms of stocks that are reacting, Just Dial, the revenues are up 8% on a sequential basis. The margins improve for fourth quarter in the row. So that's flying away as we speak. Sagar Cements, well, they've got a hold of Andhra Cements now. The LOI has been received. So that's opened mildly higher. You have HG Infra, they're backed a 400 crore order for the Delhi Metro. So that stock as well is higher in trade. NCL Industries, small cap company, only around 750, 800 crores odd. But out there you have the dispatches that are up by close to around 25%. So that's open up in the green. On the flip side, Granules, I think they're a little bit under pressure. 3 observations were observed to their Gagilapur facility after pre-approval inspection. So that stock should come up for you on the screen. And Avenue Supermarts, well, the EBITDA as well as the profit miss estimates, the margins come in at its lowest levels we've seen in the last 7 quarters. So Avenue Supermarts as well, reacting to its numbers, down closer around 5% odd. Prashant.
Nigel, this is a good open, and actually this is the open we should have had. This is the open which the SGX should have indicated as well. Because, I mean, the US stocks were higher, the dollar is lower. Overall, the environment is not too bad, and the SGX was indicative of a flattish kind of start. But this is, I think, the one that we should have been indicative. 18,040, so we are up 0.5% now. Let's just look at a few other names. Market breadth, of course, is very positive. Almost 4:1 to 3.5:1 or so. So L&T Mindtree is starting about 1.5% lower. If you can have that up. TCS is down about 1.5%. So these two names are down. There is Kolte Patil. Kolte Patil, I think, shot up on Friday. And on the back of that business update, it is down about 2%. 301, 302. What else? There is GIC RE, which is starting about 1.25% lower. MCX is a name which saw lots of buying on Friday. It's down 0.5%. We, by the way, have the management of MCX joining us later. There is DMart, which is, of course, we highlighted, down a full 5%. So that is really the big name which is correcting. There is Apar Industries, Kalyan Jewelers. So these are small cuts for this point in the day. On the upside, Varun Beverages saw some selling on Friday. It is up about 2.25%. So there is some reversal. Sula, the recent listing, that is up 5%. So 342 on Sula. Schneider is up about 4%. There is a Delivery, which is starting 3% higher. Nimesh highlighted that as part of the standout brokerage report. And you've got Ease My Trip, which is starting higher as well by about 2.6 odd percent as well. So that's, the overall picture in terms of how we are starting. On the index, it's a decent start with about 70 points on the Nifty, 18,000 25. Our market master is Sanjeev Prasad, the Managing Director and Co-Head at Kodak Institutional Equity. Sanjeev, great to have you with us here. Thank you very much. You and your team recently published this a big report looking at growth stocks and where valuations are over a number of years, going back the last many years. And the one thing which clearly kind of stood out is that, PEs have expanded, right? I mean, massively over the last 5, 6, 7 years. Just start there, Sanjeev. I mean, to you, what is the crux of that report that you put out? Are you saying that valuations need to come off quite a bit? Are you saying there is not too much comfort?
Well, two main points over there. One is, if you look at multiples, and if you look at versus history, by itself, it may not mean much. But let's say if you look at versus March 19 levels, when the 10-year G-Sec yield and policy rate were at similar levels where they are currently. Look at most of the discretionary names, the multiples are higher compared to where they were trading in March 19. So adjusted for interest rates, discount rate, cost of capital, whichever we want to look at it, it looks like multiples are on the higher side, which probably means the market is looking at growth accelerating from whatever we have seen in the past. Well, we are not very sure about that for two reasons. Number one is you are seeing a slowdown in discretionary consumption for sure. And number two is you're also starting to see a fair amount of disruption, which is coming across business models for companies which were once thought to be completely, with very, very solid modes, something which could never be breached. But of late, what we are seeing is many of the business models are starting to see some cracks, nothing alarming, but over a period of time, the business modes which people took for granted, I think are going to get breached slowly but steadily. So in that context, I'm not very sure whether, giving those multiples are justified. So our view is over a period of time, you will see, derating in the multiples of many of these high growth / quality stocks.
Okay. By the way, just wanted to point out a couple of stocks. L&T Finance is at a fresh 52-week high this morning. It's up almost about 4.5% right now, post its numbers. Very strong disbursal growth coming through, over 30% disbursal growth. And, the net interest margins as well at an all-time high, as we were telling you earlier, of 7.4%. On the flip side, it is Avenue Supermarts that's under a lot of pressure right now, down almost 5% post its numbers. Sanjeev, good morning. I wanted your thoughts on how to approach the HDFC group now. HDFC Bank has reported very good numbers. The stocks, as we know, have been huge underperformers in the past, even something like an HDFC Life. Do you think the tide is turning here?
So if you look at HDFC Bank, let's start with that one. And HDFC, anyway, will trade in line with HDFC Bank stock price now. So the stock had derated meaningfully. If you look at historically, it's been trading at more like 3.5 times 12-month forward price to book. It's come down to more like 2.8 currently. And if you look at the combined entity that is post-merger with HDFC, let's say March 24 book, which is more or less 1 year forward now, and adjusted for value of all the subsidiaries, the stock would be available at somewhere about 2.4 times March 24 combined book, which is actually fairly attractive, I would say. There's no change in the growth profile of the company, no change so far in the ROE profile of the company. Yes, that will differ a little bit going forward post the merger. But anyway, the mortgage business is a much more, I would say, lower risk, lower return business. So in that sense, it doesn't really matter that much that ROE is coming down. So yeah, HDFC Bank looks quite okay at current levels. One of our topics, I would say, in the overall market. HDFC Life, after a period of rating, it has started to see some upward mode. Valuations are okay, I would say, compared to, let's say, an ICICI Pro Life or an SBI Life. It is still on the higher side, it's about 3 times EV as of now. But, in this current environment, I think it's a reasonably good stock to own. It's a long-term good growth story, which will compounding for a very, very long period of time. So in that context, 3 times the middle value may not be a very bad value for in the context of the broader environment.
Hi, Sanjeev. Good morning. Good to hear your thoughts. Sanjeev, since we're talking about banks in the financial space, what about the PSU banking theme? That was the start of 2022. For those who hold, I mean, what's your take? And Do you believe a fresh entry as well could be made at these levels, or bulk of that re-rating has already taken place?
I would recommend a slightly longer term horizon over here. In the sense, the stocks can be fairly volatile. If there's any bad macro event, etc., the stocks can correct quite meaningfully. If the macro environment is decent, you could still see some re-rating in most of the PSU names. So if you look at something like Canada Bank, Union Bank, etc., most of them are still trading below book, about 0.8 times 1 year forward price to book. Next 2 years, we don't see too many issues with credit quality. Credit growth should be fine. So in that context, the stocks are okay to hold, but do keep a slightly longer term horizon in mind, just to tide over any volatility that you may see in the short term, more linked to global or domestic macro factors, nothing to do with the fundamentals of the banking sector, which is currently very, very solid.
Sanjeev, just to go back to what you began by saying, we're seeing some cracks in what were earlier thought to be disruption-free, some disruption in business models. Could you just talk about one or two just as examples?
Sure. I mean, look at let's say the automobile sector. We're seeing a lot of disruption in terms of competition from electric vehicles, which will surely, but slowly but surely it will come in. If you look at the four-wheeler segment, I can talk about Maruti as an example. If you look at how Maruti's competitive positioning has changed over the last 6-7 years, it's gone from being a very dominant player in the dominant segment, let's say 8-9 years back, when hatchback segment used to be something like 53% of the total volumes of the passenger vehicle mix. That's like 514. Fast forward to current, if you look at Maruti's position, it's unfortunately become a fairly average player in the dominant segment now, which is the SUV segment. So on the one side, hatchback segment has gone from 53% mix share in FY14 to something like 38% now, or in FY22. On the other hand, SUV segment has grown from 30% of total passenger vehicle sales to something like 40% in FY2022. So I don't know why the market still insists on giving such high multiples for a business model which is considerably weakened, in the sense, it has a much lower market share in the dominant segment now compared to very high market share in the dominant segment, which was valid 8-9 years back. So structurally, the company's market position has weakened significantly, but the multiples which the market wants to give is still on the higher side compared to wherever the stock is traded historically. So I guess the market is betting on the fact that you will see a quick turnaround in the fortunes of the SUV business of Maruti. That remains to be seen. They have a fairly decent a bunch of products in the pipeline. If they manage to regain some market share in the SUV segment, well and good. But if they don't, I suspect the stock could see further derating. Do keep in mind the fact that the SUV segment is a very, very competitive segment now. So to come and take a big market share here, it's going to be it's going to be an upper class as far as Maruti is concerned.
Okay, that's very interesting and very well kind of explained. Anything else? One more example, Sanjeev, from any other space?
Yeah, so many. We can look at Asian Paints, an example. Again, a superbly run company, fantastic business model. I don't see much of disruption here coming from change, in the, let's say, the strengths which matter really for the paint business, which is brand and distribution. I don't think distribution model will ever change as far as the paint industry is concerned. So that way, the paint industry will probably be one of the last sectors to be disrupted. Having said that, you are seeing a lot more competition coming, and this is from the likes of, and I would suspect fairly formidable players like Grasim or GSW, both of which whom have fairly ambitious plans in the industry. So far, what the market has taken a call is that the tier 2, tier 3, the number 2 and number 3 players will get affected a lot more. That is Berger, Kansai. And they have seen a big derating in the multiples. But somewhere the belief is that Asian Paints, because of its, absolutely amazing execution in the past several decades, will still manage, to retain its top position and also its market share. That needs to be seen. We will see how the paint industry evolves going forward.
Okay. All right, Sanjeev, we will leave it at that. Thanks a lot for joining in, and it was a pleasure speaking with you. Have a great 2023. We'll, of course, chat with you soon. The market has come off a little bit. It's not holding on to its highs, but it's not getting to new lows either. And the pressure really this morning is coming in from TCS, by the way, is going ex-dividend, so just keep an eye out on that. But apart from that, the pressure is coming in on steel. JSW Steel, Tata Steel are all under pressure, and auto stocks, Eicher Motors, M&M are also in the red. But the stock in focus is MCX. It gained in trade on Friday. It was the top F&O gainer on hopes of a volume boost from new contracts after SEBI has allowed these multiple contracts of a single commodity. Rishi Nathani, who's the Chief Business Officer at MCX of India, and Arun Raste, the Managing Director and Chief Executive Officer at NCDEX, joins us now to talk about that. Gentlemen, morning to both of you. Mr. Nathani, I want to start with you. If you can quantify for us, with now, multiple contracts being allowed, what will the benefits be for you in terms of the average daily turnover? What could the rise be?
It's very difficult to say anything regarding average daily turnover. What I could say is that this circular would lead to an increase in overall participation from various segments of the value chain, which maybe could not participate fully earlier because of the size of the contracts. So now, since there will be multiplicity in the contracts, various MSMEs and other participants could also participate in this contract. So we'll see a larger participation across the value chain.
Good morning. Mr. Nathani, just very simply, what you're saying is what this will mean is you'll be able to offer smaller sized contracts, mini contracts, which you used to offer earlier. Is that what this is?
Yeah, so earlier for example, in base metals, we had mini contracts. Now, this circular enables us to have multiple contracts on the same commodity. So effectively, we could look at mini contracts as well.
Okay, all right. Hi, Mr. Nathani. A couple of brokerages, they have written that they believe it could increase the futures average daily turnover by around 7 to 8%. Do you think that's gettable?
Well, brokerages know better what they are saying. It is very difficult for me to comment on.
I know it's difficult to put a finger or a number out there, but from your perspective, do you think it's gettable? High single digits.
All I know is participation will increase. How it translates into numbers is for the market to decide.
Mr. Nathani, you actually had mini contracts earlier, right? And then they were disallowed. Could you tell us when they were being offered? What was, in terms of sort of traded volumes on an average, what was the share of these as a percentage of the total? Say, for example, in base metals. Yeah.
Yeah, so, it's not an apple-to-apple comparison because earlier when we had mini contracts also, earlier the base metal contracts were cash settled. Now they're deliverable. So, and a lot of time has passed. So it is very difficult to give comparisons.
Okay. Can you tell us about whether you will be introducing contracts for all non-precious metals as well? And any contracts in the option space that you plan to introduce? Just trying to understand what the future would hold.
See, we keep evaluating contracts as and when we find them feasible, we definitely approach the regulator for permission. And as and when we get permissions, we will definitely launch contracts. But as of now, it is very difficult to say what contracts specifically would be launched or not.
Okay. Mr. Arun Raste has also been sitting by patiently. Mr. Arun, your thoughts on what are the commodities that are trading currently on your own platform? And for 2023, what does it hold? What kind of commodities would you be looking to launch?
So, I'll just answer this in a minute. But before that,
Sure.
There are two things which I just wanted to mention. One, this particular step of SEBI is welcome for the simple reason the SEBI has enabled the smaller investors to come into the derivatives market, basically commodities market. If you look at the number of equity traders or equity investors in this country, it is about 8 crores. And between MCX and NCDEX, we don't have more than a few lakhs. For the simple reason, say if you're looking at a 10-gram gold contract on MCX, a common investor will not be in a position to invest in that. And if you want to deepen the market and if you want to reach out to the common people, I think you need to reduce the lot size. And that was the logic for us asking for the reduction in or multiple contracts of the same contract, multiple variants. So a smaller contract, say 1 gram, will be more palatable to a small investor. And you have seen a lot of, number of investors who have been added in last 2 years, and all those people would be in a position to buy this. That is one. Second, it also helps in terms of increasing the liquidity in the market and hedging opportunities. And people can take their own risk decisions based on the contracts they have. They can have a bigger contract and they can have a smaller multiple contracts to hedge there. So we welcome this step for the simple reason that it will deepen the markets and more investors will come into commodities. Having said that, for our own exchange, we will explore what are the opportunities available to us in our own contracts. And then whatever is feasible, we will definitely go back to regulator and launch those contracts.
Okay, so going by what both you gentlemen are saying, we'll still have to see how this plays out. For the time being, the participation and volumes are likely to get a bit of a boost. But Mr. Nathani, I want to come back to you. There's another point of view with regard to MCX, with regard to the switch to TCS as the service provider. Now, since you're already going to be continuing with 63 Moon Technologies for the next couple of quarters at least, have you revised prices for them? And by when do you move to TCS software? Go ahead.
I will not be able to comment on this as of now. Whatever communication we need to bring out, we will bring out in due course.
Mr. Nathani, you have to tell us something.
Okay, by when do you switch to TCS, sir? You could give us that. I think you'll have mentioned somewhere middle of this year or so. Is that the rough timeline?
We will inform the market as and when we will make that switch.
All right, let me give it a shot. Mr. Nathani, okay, just let me stick with the 63 Moons point. Will you need permission from them to launch these contracts if you decide to do so?
We will need permission from the regulator to launch contracts.
Okay, there's nothing on the from 63 Moons. Will there be additional charges, etc., which could be levied? Will there be additional cost?
Very simply, we are in a silent period, so it is very difficult for me to make any comments.
Okay, just tell us, if you were to launch these mini contracts, by when, broad timeline, without getting into specifics, will we see something in the quarter, do additional systems, etc., need to be built in for this to happen, so it's a longer drawn-out affair? Just a broader sense.
It's very difficult to give timelines because first we'll have to evaluate the circulars just out a couple of days back. Evaluate which contracts are feasible, go to the regulator, get permissions, and then we'll inform the market and bring the contracts up.
Okay, one final question then. There is a lot of volatility lately in crude. Are you seeing crude go up in terms of your average daily turnover? What are the numbers looking like? Not asking for a forward-looking statement, but just how that market is
See, commodities. Yeah, so commodities have been volatile in the last year due to various geopolitical issues, as we are all aware. And crude is a major share of our overall turnover, which you are seeing, especially in options. And hopefully, going forward, we'll see more traction, not only in crude, but other commodities as well.
Okay, we'll leave it there, gentlemen. Great to have both of you with us today. We look forward to speaking with you, both of you, around the time of the earnings release. I understand, Mr. Nathani, you're in the silent period, so cannot reveal very much, but I hope you'll be able to do so post the earnings. Thank you very much, Mr. Nathani and Mr. Raste, for being with us here on the show. Well, the market has given up most of these gains. We are just about 18 or 19 points higher, 17,976. So, the opening gap is all but gone. Market breadth is also not converged fully, but almost 4:1. It's now 2:1. Still in favor of advances, though. And Adani Green is something I just like you to put up. It's up 5%, and it's the second top traded volume name in the market. Just Dial, of course, was up 10%. It's up 9%. And Sula, I highlighted at open, was up 5%. It's up 9 or 10% at this point in time. So there is a fair bit. Yeah, sorry.
It's the highest ever, by the way, sales that Sula has reported. So people are chugging along, chugging it.
With good help from Nigel. Nigel was advertising on Friday how it's going to be Good Friday. So
Good Friday.
All right, we'll take a quick commercial break here. We have another very interesting chat lined up. Bhanu Chopra of RateGain Travel Technologies will be with us. That's an interesting company in the travel SaaS software space. Stock's done well recently. That conversation in just a bit. Later, we'll analyze expectations from the NBFC sector in the third quarter in our special segment, Quarter Se Quarter Tak, with Sameer Bhise of JM Financial Institutional Securities. Stay with us.
presented by